Nice. Okay, guys, let's get started. Tell me, what do you want to look at first? I'm free to go everywhere you want me to go. I saw on Twitter somebody mentioned I should look at GBP USD today. SPX, I see. British pound, Bitcoin, Euro, Canadian dollar. That's very... I don't know if I want to look at the Euro Canadian dollar, but we can have a look. I think I never looked at it. Nasdaq. Okay, I guess gold also. Okay, so we're gonna do a tour today, going through the main instruments, and we are looking what we can see here. I think you guys followed on Twitter, so I'm still in my trade here, but I'm not worried. Stop is on entry, so either I'm getting filled or I'm getting stopped out. Like in my trading plan, it's very simple. So I set the targets before I enter trades, and I'm not allowed to take any partials before my target is hit. The only exception for this rule is 30 minutes before the market is closing. Then I can sell wherever I want. Else I just stick to the trade and wait for it either to get stopped out or to go down to my first profit target. In this case, it's the 0.5 standard deviation. But there is no harm and foul for you when you're starting to trade the concept to just take your partials here or to sell the trade here. I personally have my target here, but I said already on Twitter, taking partials or selling with the new low. When you look at the time frames, so we are here, really every new low can force a retracement because we have nothing on the left side. When you look to the left of the chart, you will see that's the big up move we had. Let's switch to the 30 minutes chart. So you see, like we are right now exactly in this big up move we had. So there are no liquidities or bigger liquidity areas here. I think we have some liquidity void down here. So taking in this scenario, taking the profits with a new low is always not a bad idea. So good. So then let's start with the ES. Just trying him having a hut. No, I don't move stop to 1 hour because it doesn't make sense because like my 1 hour would be somewhere around here. So I entered here, my stop was here. So 1 hour would be, yeah, exactly where it's getting hot because like as you can see, we have one fair value gap here. We have a fair value gap here. So my stop would be already hit and I just don't like it. I just follow my rules because I don't really care if I'm getting stopped out because on the long run, sticking to my target just pays way more better than taking trades early. So that's just me. But that's also like, if you check my recap videos, there are a lot of days where I'm like up 10R or something like that. And I'm ending the day with 0 or even -1 because I don't take the profits because my targets are not hit. But I can tell you out of personal experience, for me, it's paying much more when I just stick to my targets. I will have those days where I'm just literally getting BE'd on almost every trade I take, but they are not that often. So yeah. Okay, let's start with ES now. So let's start with the ADR As you can see, like the ADR literally gives us already a little example what we have to expect during the day. So we are opening and we go down and then we do directly have a confirmation long. Then we have direct pull down or retracement back on top of the DR level. And then we see the expansion to the top. Let's take our standard deviation and we see we reach 0.5 already in the confirmation move. And then we reach up to 1.5 standard deviation. So this could be a trade which you can take. I mean, you have clear rejection here into a fair value gap over here. So that could be one potential trade today. So you would enter this trade in the fair value gap or directly at the DR, depends on how you want to do it. Your stop would be below IDR and below the opening of the ADR session, which is the green line. And your target would be, depends on where you want to have your target. Either one standard deviation, I removed them already, but I think standard deviation would be here, which would be 1 to 2, or 1.5 would be around 3R. So then the market comes back. We don't really see rejections which are continuing to go up. So here we have the opening price. So after taking this trade, you potentially take this trade too. Like potentially this would be a trade I would take if I go, like if I didn't take this trade and I watch the session, I would potentially go long here and I would get stopped out. I would not take a trade on the 50 point. I mean, you can see there is no rejection happening. So I wouldn't take a trade here. And then I would take the next trade most likely around this level here, which would be a retirement setup. But, and I would lose this trade too. So overall, when you take all three trades, and with the confirmation here, you would stop trading if you're a beginner or a starter, because then you don't have a bias anymore from the DR, so it couldn't go all the way to, like we see, back to the other side. So this is a 2 plus, 2 minus if you traded really like every single opportunity you see. So RDR would be like either plus minus 0, or you would end up with 1 plus R, depends on how you take the first trade. So then we're going into the ODR. So we are coming down. I don't see any trades for me here. So the first trade I would see would be around these levels here. So again, we are coming down. We are getting an early confirmation. Price drives up, gets rejected from the DR levels, can't close above. Price again gets rejected again, goes over. Closes one time above the IDR, gets rejected, gets rejected, gets rejected. So that would be potential short for me, like we already have seen also in the RDR session. So you would enter here, your stop would be 2 ticks above this, and your target would be the standard deviation level 1.5 here. Or with partials, you could take here. It's the same setup like we see right now in the RDR setup. Session. So that would be like a 3.10 and with partials maybe 2R plus. Then market comes up. We have one rejection here, second rejection, third rejection. So there potentially, if you want to go hardcore, again, you could take a trade here. And you most likely, if I take a trade here, I would be stopped out. So that's -1. Then we have price going up. We have price going up again. So after this trade, I would be careful, because whenever we have close above these levels, and it's not only one candle with direct rejection, then I normally don't trade in between here, because then I expect retracements which are going higher than the 0, or like the 0.5 mid level of the IDR, or even going higher. So it would be this winning trade, and there would be a losing trade for me personally if I trade it. This one I wouldn't take because of what I just said. And then ODR finishes. So now it's getting interesting. So now we see what I already explained here. So what I would expect here, a tracement above the 0.5 midpoint. Oh, I got stopped out. Yes. So a retracement above the 0.5 level, I already explained why I would expect it here, because we are closing above the DR low and the IDR low. So that's exactly happening when we are going into the open of New York. So when you now use what we have seen in the ADR and in the ODR, so we see an expansion model to the downside, right? So, and now you look, you have the 0.5 retracement over here. We have the opening from the ODR here. We have the high of the IDR from the ODR, and we have the DR high. So all of this cluster is sitting on top of here. So if you look now on top of it, and you would draw out your IDR levels, so you see that around the 0.5 standard deviation from yesterday RDR, we also have the -5 from the day before, the -5 from the day before. So there is a cluster around this area. So you could just simply take the lines here and just draw them over here. We have this one, we have this one, and we have the 0.5 level above. So that could give you, considering RDR, ODR, and the cluster of DR levels in this area, could give you a hint that you can take this short. So what you will want to do is just simply take a short on this level, whatever here, and have your stop above the cluster. Yes. So you don't want to have it above the DR in this case, because we don't want market to come over here. So you have 3 standard deviation levels over here, plus the opening from the OTR, plus the IDR. So that's 5 levels where price and the algo has to push through. 5 times where the algo is checking what the price movement is doing. And 5 potential areas where the algo sees there is nothing left, so he wants to shift gears. So that's why I would put my stop over here. And your target would be a new low, in this case, which would be here. And that would be a 4.79 trade with a stop. Of course, you can go lower with the stop, but it doesn't make sense in this scenario. So everything here should be the area where you can expect price to remove or to go back. So now we are seeing, by the way, we are seeing the price come back to the DR levels. That's it. And the last trade for today in ES would be the way I've also shown on Twitter already. So here we have the nice rejection, and then price is going for another new low. So that's the trade you could have taken in the RDR if you would have not taken the one over here. So if you look closer, there's also a fair value gap inside here. So that would be also additional confluence for here. So you can see this even better here in the SPX, in the 1 minute chart. So we have confirmation here, then market goes up. There's nothing I would take, because same like I explained in the ODR session. So I want to see price either stay below or above the DR. So in this case, we see we go down, we go up, we go down, we go up. So there is not real rejection. And then we go down, we create new lows, and then price up comes up and shows me the nice rejection. Also, like if you use the tick grid, again, we have high tick numbers over here. So it's also indicating that the up move is for this moment done. And then we go down, we make a new low, and that's it. So if you stay like me until 0.5, that's not a problem because you have a high probability that the 0.5 will be reached. Today it was not the case, but on other days it will be the case. So there is no harm, no foul. Now the question maybe some of you have, do you want to trade this? Do we want to trade this now? Chat. Okay, who can explain me why we don't want to trade this? It's the end of the week, it's Friday, it's too late. I don't think it's a time question. The point is why I wouldn't take a trade here anymore is just simply because price and the algo obviously has a reason to drive more up. So we took out, there's another fair value gap here. So we didn't respect this one, we didn't respect that one. So it's more likely that we will see a higher retracement, taking out some buy-side liquidity here, even going up here maybe into the fair value gap. That's just what price is showing you. So like either there was like two options, either the market continues to go lower here and makes a new low, or it's retracing. And for now, this wouldn't be a high probability trade for me because price action just shows me clearly that the algo right now wants to go higher. Still can go down, but for now, it doesn't show me any reason to enter this trade, right? So more likely that we see price go higher, but technically also we can reject from here. But that's not a trade I would take, to be honest. So recap on the whole day. So the trades what we had, that was like plus minus 0 in the worst case situation. Here we would have +1. And here, depending on if we trade this one, let's say we don't trade this one, we still would end up like with +3 for the day right now. If you would have only traded ES. If you would have taken this, you would be sitting around 5 or 6 plus R. Rejecting daily order block, yeah, could be. I'm trying in this live sessions not to go too much into order blocks and higher time frame PD areas. We will do that, but for now I'm just trying to explain a simple version of how you can find trades which are making sense for you. And of course, if you use higher time frame PDs, you're using order blocks, you're using like volume imbalances from the higher time frame, you get even a better picture about where to enter and where not to enter. Okay, so let's go to the next one. Let's stick with equity for a second and let's go to the NASDAQ. So NASDAQ, it's actually the same. I'll make it quick. So we have the confirmation to the long side. We see rejection over here, 1 candle, 2 candles, 3 candles. So you can take a long here. Target again, 0.5 or higher. And then we are getting a rejection over here. So -1. I would not take the 50% level. and I would take a retirement setup over here, so that will be stopped out. Same picture like in ES. Then we have the ODR session, so we are getting confirmation short. I don't see any rejections here. I only like that's an important point to look at. So if you look at the NQ, what do you see here? There is no short rejection, right? So what we see is a long of plenty of candles rejecting to the upside from the DR levels, right? So here you don't take a short. So same goes around this level. There is not really any. We're closing above, we're going back, we're closing in, we're closing above. We have one standard deviation level here, and we have the midpoint here. So it's actually more looking like long. So technically, if you want to trade long, that would be like one example. The range is big enough, but like we can clearly see down here, the price and the algo wants to go up, because you see, and I hope it's obvious to you like it is to me, like we see clearly signs that market and price wants to stay above this level, right? Is that clear? There's no rule to define rejection. Rejection is so simple. Look at the candles. I mean, how to explain rejection? Rejection means, in my brain, means that price is clearly not able to close below. So we have an indication that we want to go short, right? So if price is doing the opposite, and instead of rejecting into this direction, and it shows me it wants to stay above, then I don't look for a short, right? There's nothing subjective. It's clear. I don't know. Maybe I'm not clear in explaining it, but there is nothing unclear. Rejection means if you take a level on the chart, so rejection is that price is not able to close below this line. This is a rejection. There's not even, it's so clear. I don't know how to say it in other words maybe, but like if price is not able to close below, then it's rejecting from this level. And that's what we see here. Yeah. It's dipping one time down, then immediately goes up. It dips down and it's getting up again. It dips down and it's getting up again. It dips down and it's getting up again. It tries again, and again it's getting rejected. So this is, I mean, when somebody is asking me or saying that's subjective, then I don't know, to be honest, guys, because it's simply obviously market and the price and the algo doesn't want to close below the DR. It's trying it. It's not that it's not trying it, but it's getting immediately reversed every time. Look at this. This candle closes below immediately. The up candle is bigger than the down candle, and it's closing immediately again above the DR line. We are trying it again, and immediately bigger up candle and closing above again. We are trying it again. We can't make it here. We can't even go down anymore to the DR. Now we are fighting on the IDR levels. So close below IDR level, immediately close above again. Again, bigger candle like here. Then next try, we are closing here. We are not able to go below DR anymore. And then we are getting rejected again, big time with a big candle, almost covering 3 of the down candles. So that's rejection. So I think that should be very clear. And if you don't understand it, just rewatch the video and just look at price, because this is a very good example for rejection because it's so obvious. Yeah. So then we have, so there is nothing here. It's getting 8 o'clock. Retirement setup, that's the one I traded also, and I showed on Twitter too. That's like the simple, I just go short. I have a confirmation to the short side. Price is going close to the opposite IDR. That's just like for me a trade I take always. So I took this trade, market comes down here, the session ends, so I put my stop on entry and I'm getting stopped out here. So no harm, no foul here. And then Nasdaq drives up and goes above the ADR levels, takes out this little high, it's not taking out this high, takes out the little high from the Asia session and the ADR session and then falls down. No trade for me here. Can't see anything which would make me want to go in because there is nothing respected over here. Even the previous day levels, so we are somewhere in the middle when it comes to Nasdaq, so no short for me here. And then we have the same setup we just had in the S&P. So here we are fighting, but it's not very clear. Here we have the first sign of rejection, so you could already take this trade technically, target new low. And then we came to the same situation we have seen in ES. So price goes up here, rejects from here, closes again below the R, so you take directly this entry with target 0.5 or new low. So the real important point in when you're using DR, IDR and you're looking for an entry, it's like I can really simplify it to stopped out points. I thought I was doing something wrong. I don't understand. Let me finish that and I will look at your question, okay? So when I'm looking at price, this is my playing field. So I have this area where I know I place trades. And I have certain points from the ODR and from the ADR which are reference to me, yeah? So for example, before we shoot up here, like you can come to this, but that's like already advanced stuff. So as you can see, when we are opening here, it's respecting that we're getting rejection over here. And then also price is going above the high DR from ADR. And look what is happening here. So first we're getting rejected, but then we are getting back immediately. So looking at all how it played out, and if you take ICT and further knowledge into play, you could classify this first as buy-side liquidity taking out of the Asia session. And this would be literally the fake swing or the Judah swing here. And returning back into this ADR range and confirming it with this big candle could be a reason for you to enter short. Yes. So, but that's advanced. It's not something which is like for a beginner. A beginner should just simply not trade here. Yeah, but like it gives you so much confluence using the system and using the other entry models which you have to understand. When I was looking at this, because I took the retirement setup in the ODR session. So I was looking a little bit at Nasdaq. So I saw this and I was thinking about shorting it. But as I don't like the NQ so much, I went back to ES and looked at ES or not in the NQ. But for me, that would have been with break back into the structure and closing below. I would have taken a short here once we close inside the ADR levels again. Because I would know there's a high probability that this was the Judah high for the session, and now we're gonna go down and we're gonna grab for sell side liquidity. But that's advanced. So what was it? The question, Wixon Bell. I was getting stopped out taking the same trade. I thought I was doing something wrong. I'm happy you've shown that it's normal. Yeah, it happens. I mean, that's also the point, because people saying hindsight, like when I look at charts, and I said this already in the last stream or in the Discord stream, I think I explained it. I am not looking at what the candles are doing down here. So if I look at the ODR session, my head is always going from once the session is closed. I always go candle for candle and I ask myself, would there be something which would pull me into a trade? is this something I want to trade? Is this something that I want to trade? Is this something I want to trade? So that's very important for me to look at all the structure building up during a day. Even if I'm looking at a chart in hindsight, I'm not just saying, yeah, okay, I enter a trade because I know that the market will go down. No, I'm looking for reasons which I know trades I would take. And that's also why I can tell you, okay, I would take maybe this one and I will take 2 minus trades here. That's just what it is. But losing is not a problem, because as we have seen in the ES, you would still have ended up the session in plus, right? So it's all about being honest to yourself and looking at price as it is, because like if somebody is telling you that he doesn't take any losing trades or something like that, it's just straightforward bullshit. You need to be honest to yourself also when you're doing backtesting. A lot of people are very good in backtesting, and then when it comes to live testing or to live trading, they fail horrible. And that's just because while they're doing their backtesting, they are not honest to themselves. So if you don't do it like I do, then at least use the replay, because it will just give you a wrong confidence. Because it's a big difference if you look at price, how it's developing right now. And let's go back to this example. So a lot of people would say, yeah, I would have taken this trade, but you heard me what I was saying. So I'm telling you, I would have not taken this trade. But like somebody who's not honest to themselves and don't looks at price in terms how it's developing in the price action, would tell you, yeah, this is a trade I would take. Yeah. Because he sees, okay, this is correct now, and now we are moving down and we're making a new low, right? So be honest to yourself, because at the end of the day, it's nobody cares what you're posting on your chart or what you're saying. At the end of the day, it's for you, and you're not doing yourself a favor if you say, I take this trade after fair value gaps are just getting ignored, fair value gap is getting ignored, now we are not taking any buy side liquidity, so there is not a lot of reason to take this trade. Only that you know that the price is going down now. So we had also yesterday in the live stream, we had a perfect day where you can make 30R. Today you see it's not always perfect. There will be losing trades in between. There will be trades where you make money. There will be trades like this one where I got stopped out BE, and I'm pretty sure on Twitter a lot of people I saw just took the profits over there and they made profit. I didn't make a profit with this trade at all. So, and that's fine. I mean, again, coming back to my 7R per week over 81 weeks, and you will bring an account from 10,000 to 1.28 million. And all you need to do is 7R on average per week. So you don't have to chase 20R, even if it's possible. So be real to yourself if you backtest stuff. So now we are going to, I'm going to do the tick grid in a different area, but like where I posted the tick grid script in our Discord, and there is also an explanation to the grid. But I don't want to spend too much time today. It's very simple. So the tick is comparing all shares on New York Stock Exchange on how many of them have upticks. So upticks means it's ticking up, the price is going up, and how many of them have minus ticks, means price is going down. And the number what you see here in the script, it means in this case there was a plus or a delta of 1,000 shares ticking up. And here, down here, it means the delta was 600 shares are ticking down. So that shows you just buying and selling in the shares which are traded on New York Stock Exchange. So whenever we're reaching these levels, you don't know, it doesn't give you an idea what price will do next, but like it tells you now you can expect a retracement, and the same when we are reaching the upper levels. But it's something you can only use during the regular session, and like I really tell you to understand it. So it doesn't mean that every time we reach a high that the market is doing this. Yeah. So today it's fine because like this tick number is now confluence with what we have in the DR. So whenever we see a tick number like here, tick number goes goes here. Yeah, and we already have the confluence from the DR. And the next high tick number is here. So also confluence short, that goes along. Here, same confluence short. Yes. And then you have also the point of having, you see that, like the price is going up, that's the high, the next high, and it's not really going really higher on the tick side. You have SMTs also here. But like I said, this is just something for the 1 minute chart and for the regular session, and it only works for NASDAQ, Dow Jones, and S&P 500. But I will cover this in a different topic once we are done with all the stuff which is related to DR, IDR. I will make the videos of other things I'm using or I like to use during trading the sessions. So let's go to British pound. That was one question. So British pound, ODR, similar to the indices. So we are getting an early confirmation to the long side. So we are looking for a long trade. So we see some rejection over here. So either you enter long here and then it breaks down. Then we are going back to the open price. So that's the next point where you could take an entry. If you don't take this entry, there is another entry here. So I mean, I don't have to explain that all, right? Either you enter already here. When you don't enter here, you might enter here. Then you have this up move. Then price comes down again. You might enter here again because, no, not really, because here's not really rejection. So you have three, now I'm talking Deutsch. You have 3 entry points here for the same trade at the end of the day. And that's it for the ODR. Let's take somewhere in the middle here. Your stop would be below the 50. Zack. Target would be the high. So that's a 6R trade, and you could have entered here, 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 here. If you enter here, of course, you have a little bit less, but that's 6 plus plus R for the ADR. Any sense, or like, does it make sense what I said about the ADR, GP? Okay, no questions. Now I can't switch to German. So then we are going to the ODR session. Again, nice thing like we have seen in ES today also. So you could take the ADR levels again to build confidence for the direction. So comes down, closes below, goes up, gets rejected at which point? Exactly at the DR low of the ADR. So 2 times rejection, goes down, goes up again, gets rejected again. So that's a nice trade which you can take. But again, is usage of ADR, ODR together, which I explained in part 3 of the piece. Does that make sense? Everybody sees what I mean? I don't know about VVP. Also makes sense. It's important when I'm talking to you. I mean, I don't hear you talking, but like for me, it's also to understand that it makes sense, that there is a logic behind which you can follow. So literally you draw a line here, you don't enter blind on the line, right? You enter, you see here, price is not closing above the line. Then price is opening and it's dropping down. So this is the confirmation for you to rejection. So you would enter, when you want to enter early, you go in here maybe around this level, and your stop would be here, and your target would be the 0.5 standard deviation. So which would be here. So that's 3R. Or you enter here. So you wait for this. You could enter with a fair value gap, but I don't personally like this fair value gap. So, or you switch down to the 1 minute time frame and see if you get a better setup there. Let's look at that for a second. Where are we? So that's the area where we're looking for. So here, 1 minute chart, that's your entry, right? Then we have another entry here. Then the market is coming up. And here, yeah, this one is hard to take at the end of the day. At least for the 1 minute chart. In the 5 minute chart, you can enter just on this one. But in the 1 minute, I would not enter here. I would be either already short or anyway, I would look at the 5 minute. So that's very clear. Any questions to this one? Yeah, you're welcome. No problem. So ODR is clear, yeah? Okay, makes sense. Then we have confluence, and of course, like if you don't take this trade and you wait for confirmation, you get the confirmation here. So I would see a short entry here. We have a nice rejection here. It's inside a fair value gap. So that would be a losing trade for sure for me. If I have not traded this, I would lose 1R here because just simply I see this candle is giving me the rejection I want to see. This is inside a fair value gap. We are rejecting from the DR low and the IDR low, so I would take a short here for sure. And I would get stopped out. And then same like I said before, so once price is going above the IDR low and the DR low, I'm not looking for a trade necessarily here. So because I know that we most likely see a higher retracement, and as we see rejection from here, also inside a fair value gap. But again, this is a low probability fair value gap, so nothing to look for normally. We have in rejection now to the upside. We go above. Price is not able to close below. We stay above. We're going up and we're breaking. So let's be realistically. Let's say if you trade only DR, you would have lost -2 here, and that's it. With this move up here, you would be finished, and that's it. And now we are coming to the RDR in British pound. So here, nothing. We're not even taking out the buy side liquidity. We have equal highs over here now. Equal highs, you see, we are not even reaching into it. So nothing to do here out of my perspective. We are going down. We are getting the confirmation to the short side. And like, if you take confluence, like you would be thinking, okay, 3 highs, is that a good sign or a bad sign for short direction? So I would normally consider this as something which is like at least would make me suspicious when I'm looking for short, because like this is like a magnet. Sooner or later today or in the after session or during the night, I'm pretty sure we will take out these highs at some point. But that's just how the market is today. It's not such a beautiful day. So again, we are seeing here rejection. I would most likely trade this one So same setup like in ES. So I would enter here and would speculate at least for the 0.5 and the break of the low. Not gonna happen. I would have already my stop on BA for this one. So, and then we go up. There is no rejection. We go and then we see again what I described before. From now on, algo switched into the buying macro, and you can see we are holding this line now. And that could be a potential short with the rejection from the midpoint, but like this short would be there's this level which makes sense. Like when you enter here, you have to have your stop up here. So and then you have to ask yourself, is this worth? It's 1.6 risk reward ratio. So in my world, I wouldn't take this because it's just not worth it. I don't have like here is a fair value gap. So we are inside an area where retracement can go up to. And the whole price action today. So we are literally going back into the ADR range, which is normally not a good sign. So that means like more a day, which is slightly towards, but like it can go to both sides, as we can see right now. So that's a potential trade you could take. I mean, there is no harm, no foul to take this trade. The rejection is there, but me personally, I would not trade there. But I could see the reasoning for taking this trade. But me personally, I would be not interested in that setup. So what else? So we have British pound. What else we wanna look for? Well, like because I see the question, the Fibos, like you either draw them from day to day. I mean, that's like every day you'd only need to draw one time, and that's the RDR session. And if you trade the RDR, and if you trade the other sessions, you can just for your target placement, you set a fib. But like my script is doing everything for myself, so I can tell the script to show me all standard deviation levels or only the last session. But like you don't have the script, I know. So what you're doing every time there is an RDR, you draw your session, you draw it out till 8:30 the next morning, and then you have it. It's a little bit of work, but it's 2 clicks per day, so I don't think it's no, we are not looking at bonds. Definitely not. I'm gonna get seasick looking at bonds. I don't like, that's why I never touch bonds because I really don't like the candles. Looking at this just makes me sick. It's it's nothing, even though I know it's working and it's perfect setups. Here we have a beautiful retirement setup, by the way. Um, but I couldn't touch this. This is like, I don't know. I don't want to say my eyes are getting cancer, but that's how it feels, to be honest. So yeah, I'm not looking with you guys. Beautiful retirement setup. That's easy peasy. Yeah, whatever. New low, standard deviation. That would be a nice trade. But no, we are not looking at this. Gold. Okay, let's gold. Let's go gold. Well, beautiful. So in equity was kind of boring today or difficult. Gold looks beautiful to me. So, and look, that's what I'm saying. Look at the, look at the point that there's the difference between looking inside or looking at a chart and be real to yourself. Because like a lot of people would say, yeah, enter down here or something like that. But in reality, what we see here, confirmation, price comes down here. 1 rejection, 2, 3, 4, 5, 6, 7. At this point, latest with this candle, you have to enter. No way that you're waiting for this one to happen. So your entry would be here. No way that you show me a chart where you enter like this, because here there is no reason anymore to enter, right? So quite simple setup. Goes up, goes a new high. Let's check. That's easy. 5.3. Holy shit. 5.3 R, easy. Nothing to think about. That would be trading for dummies. Then we have the ODR session. Same picture. This is a little bit tricky. I mean, you can take this, but me personally, no. I think I wouldn't take this trade. But like that's a setup, I mean, at the end of the day. But looking at what happened before, so we have this one, we take out the buy side liquidity here, we go down, we take out this sell side liquidity, we take out this low, but we're not reaching for this low. So I would not go crazy looking for a setup like that. But if you don't care, like this could be an entry. Maybe looking for in the 1 minute chart combined with fair value gap, but what I see in the 5 minute chart, that would be not an entry for me. But like I'm pretty sure there are entries inside of here when you just follow the R, which you could take, right? So I mean, as you can see, it would have worked out well. And now we're having the RDR session, so nothing is happening, no confirmation, no IDR early indications, so nothing more to see here. But like an easy 5R. I mean, let's be real to each other. So do you really think like even me, if I would take this trade in the morning, I'm not so keen to jump in and take all the setups I find, right? I mean, you must be losing it if you like you have to find a point where you say, okay, like that's my profit, I made this and I'm done for the day. Like I can't tell you if I make 5 to 6 R with this trade where I'm just chilling and I'm literally going coffee meanwhile and I'm coming back and I have 5 R plus. I'm not gonna chase this anymore, you know? So for me in my head, when I start the day like that, I would take trades, but I'm only looking for the high. Like it must be like a retirement setup where I'm like going absolutely crazy because everything looks right for me. Else, I'm not gonna take a trade anymore. I'm looking and I'm only taking trades when I'm getting like really the perfect setup on my table. But else, I'm just gonna chill and watch price action. So for me, it's not Netflix and chill. For me, is price action and chill. That's it. So that was gold. What's next? No, I have a fixed percentage risk. So I like, and I like, that's also important. Like for people who are using a fixed numbers, what they are trading, um, then it doesn't make sense the way trade like I trade. You need like a fixed R, which is fixed to a percentage of your account, because else it would not make sense to take stop losses like I'm showing you here. Because like if you trade a fixed amount of contracts, that's a different story. You have to use a different model. Euro USD. Let's go Euro USD. Well, same like so we don't have to go over this. A nice 6R trade over here. RDR, literally at 2 o'clock in the morning, you can call it a day. Depends on your time zone. The ODR looks a little bit better. You have a nice fair value gap entry here. That could be a potential entry over here. So -1 here if you trade this. I would take this trade definitely with stop above the midpoint. I would have not taken any profits on this trade because my target would be over here. So that would be stopped out on break even with this candle. So -1 for me here if I would trade it. And then we go into the RDR and it's like same picture like we have in YM. So again, here you can build up your confluence. We have a small volume imbalance, which is 100% matching the highs over here. We have a fair value gap. We stay below the IDR. We have a fair value gap over here. We are below the 50%, above the 50% of the ODR range. So I could see a short trade entry over here when I'm considering everything together, because also if you take this one over here, we'll see that this one is also aligning. So we close above and then immediate rejection, and the second candle or the third candle is not able to close above. So that would be a potential short entry. We are not counting this one because it's advanced. And then we get our short confirmation. I don't see any short here. Yeah, I would maybe take a short here and a short here. So that will still play out. Would have taken already partial 0.5. So most likely this would be like 1. Let's check. So here I would use the open price because of the wicks what we have, and it's not so clear. If I enter here, my stop would be here. If I would enter on this candle, so the second move, my stop would be 2 ticks above this one. So it depends a little bit. Target would be down here. So let's say 2 to 3 R with this trade. Either you take this one or you take this one. So that's Euro USD. Color of my candles, green. Okay, I think one more. I missed DXY, right? DXY, you want it? I guess so. I'm not gonna go over the retirement setup today. We'll make this separately. But like, you just check on Twitter and on Discord, like there's a lot already out for the retirement setup. It's a very simple setup to follow and to go through. It's literally once you get confirmation to one side and the market reaches this area of the opposite IDR, just go long or short, depends on where the confirmation is, and you have your stop above this. That's all. Okay, so last one, currency index, USD. So confirmation to the short side, rejection. So the early birds would take a short already here. It's not a big range here. Stop above the middle line. As you can see, it's not only the midpoint, there is also directly the open close. So it's 2 clusters above it. Plus on top of it, we have the previous RDR session high, DR high, which is here. So a lot of confluence to have your stop above these 3 levels, right? That makes sense? Makes sense? Okay. So target here, depends on how you want to have it. That would be the first trade. That would be the early one. And the second one, of course, comes here. That's also, I don't have to explain anything. Rejection. So you enter short, your target would be here. Times runs out, you're selling down here. So after this is already confirmed, you don't want the price to come up here anymore. And your target would be down here, but we are not reaching this. And time ends at which candle? This is where the time zone ends, so that would be your worst selling price, so that's another 5R. So both trades, if you would have taken, like that would be already 10R. So let's call it a day. Then we have the ODR session. So no entry here. Okay, quick one could be already entering here, but I don't see it. I don't like this volume imbalance here. So I would expect price to come back to this level at least for retracement. There is another one down here. So when I see something like that and we are going up and we're having confirmation, and then you see also up here, look, another one. When price is looking like that, it's almost 100% sure that the price will go back to these levels. Because like really solid moves in price action, they don't have these gaps. You're gonna study it and watch it, and you will figure out that when you have these gaps inside, it almost 90% indicates that the price will return to this. Like really strong moves are not having these gaps inside. So that's why I wouldn't take a trade here. Same goes here, because I know there is a chance of a high chance that we will return to this level. But even if you take it here and here again, like you see the rejection here, and we have another one here. So, but even if you take this, let's say you take this trade because it's a rejection technically, then you are -1, price comes down, reaches this volume imbalance, touches exactly this volume imbalance, and we're looking for a long entry. Price goes up, goes down, gets rejected 50%, gets rejected 50%, goes up again, gets rejected again. So we enter a trade here. Stop below here, 2 ticks. And where the time ends at this candle. So that 1.46 R, if you sell it earlier because you know it's time, like let's say between 1.5 and 2 R, when you lose 1 R here, so you're ±0 for this session. And then we have RDR confirmation, no rejection. And yeah, potentially you would take a long either here, like when I'm saying taking a long, that's me. So I would potentially either take a long here. I wouldn't take a long here because I wouldn't like the rejection from here. So we go above and we go immediately down. But this one could be a potential entry for me. But based on price structure, you can't work with like a super tight stop. So if I enter here, I would have my stop below the 50. But again, it would be 1 to 125. So that would be also not a trade to take. So I would stay away from this one. It's just not enough juice for me. So overall, like DXY today, 6 plus R. What would have been the potential? Handling large lots. What is the problem with handling large lots? Yes. Like I'm updating my risk size from my personal accounts. I'm updating them every Monday. So I know my risk size in money based on the updates I'm doing on Monday. so after every trading week. And then with the order routing and the brokers I'm using, I can fix my percentage, and it's calculating me automatically how many ES contracts I have to buy with my stop. Yeah, I think like when it comes to handling big lots, that's not, it's like technically if you use with $1,000, the trading and the execution of your trades doesn't change up to, let's say, 40 million. Once you reach like an account size of 40 million, you have to think about using direct order routing. So you're not going just via normal market orders. You're like, there is something because your lot size is gonna get too big, or your contract size. So you want to have this delivered quickly into different exchanges so that you're not getting caught from one of the algos. But from 1,000 to 4 million, there's no difference in execution and trading. The only difference will happen in your brain, because it's a difference. Like if you trade $1,000, you like seeing your maximum losing $10. But like if you trade a 20 million account, hello, I'm still online. Yeah, I got disconnected somehow. So, yep. So, like the earlier you start to look at your trading only from our perspective and and percentage perspective, the better it will be for you in the future. Because you will, like if you're looking at money and your profit loss, you will get problems the more you're going up. So I can tell you that for me, I don't really care, because first of all, I'm not even looking at the money amount. And second, I was used to trade 100s of millions. So P&L numbers are just not interesting for me, because at work, as you can imagine, the amount and the AUM we had under management was just way bigger than that you can even process in your head. So that's why for me it's not a problem. But I know for a lot of people, when they grow their account or when they have bigger accounts, it's gonna it's gonna blow their head, because they're just looking at the amount of money and just thinking, shit, whatever, $10,000 are gone. They can't handle that. But like if you start now just looking at your percentage and your risk units, you're not going to have this problem. You have to get away from this mindset, because this is like, call it business cost. Yeah, like if you would run a big company, you have costs, you have to pay your employees, you have to pay whatever. So that's just the cost, and losing money is business cost in trading. But like if you're freaking out by losing 1,000 or $10,000 and you can't handle it, you really have to work on your mindset. It's really important. So maybe one more question. Dieser Chat und Livestream ist Eigentum der Bundesrepublik Deutschland. And how do you? For me, that's what I'm trying to tell you. I don't care if I'm trading 40 million, 60 million, 10 million, or 1,000. My process, my entries, my trades, everything, I'm doing the same. There's no, for me, account size doesn't make a difference. And if you mean what you do with 40 million, so we'll talk about this when you come there, then I'm pretty happy to help you out to find a direct order routing. Then you need to use softwares like CQG, you have to use different brokers, but it shouldn't be a problem. Even with Goldman, you're getting an account when you have 40 million, so don't worry. You will have access to black pools and ATS systems, so you don't have to worry about that. But once get there and then chill. Most of the people most likely are retiring. That's true. Percentage? Do you mean win rate? I don't know. It doesn't matter. You can go up to 100 million, 200 million. Like I was trading portfolios in billion sizes. So like all is possible, all is doable. That's just a technical question. But if your mind is not handling then it doesn't matter which size you're trading. Would you consider higher R? No. As a beginner, like that's also something which I always tell people who are starting trading. Instead of 1% R and you're trading a real money account, I'm not talking about funded accounts, just just use like 0.1, 0.2% risk for your trades because that will do you more favor than using 1%, where you're maybe already coming into this trouble that you have problems with not trusting the system or not yourself. So if I would be starting today with trading and I would see the first time about DR, IDR, and ICT, I would just trade with 0.1% risk because like that lets me feel the system, lets me be in the market, lets me feel how it feels to be trading. And I wouldn't worry too much because at the end of the day, I can build up the confidence and the trust into the system. I would be able to execute trades even with a new system because I'm bringing down my risk and it's just math. So all these fixed R units based on percentage are calculated that the probability that you're losing your complete account goes below 0.01%. That's why you're using this kind of risk management system. So if you turn it down to 0.1, you're reducing your total loss risk to 0.00001%. So I wouldn't be worried and I can test a new system. And once you're on a level where you're like super, super good trader, then you can play with it. Like I have setups where I'm using 3R, right? So top-notch setup in my trading plan, I can go up to 3R, risking up to 3R for this trade. But that's in a later stage. First, get the basics, get the systems, get your models down. Once you're there, you can play with variants in your R system. But for the beginning, no. Do we have a VTR? Yeah, we have it, but you don't have it. I have it. ES. What? You see, I mean, that's the reason why I don't want to take a trade here. I mean, I explained it everything, so now it's 12, it's like 45 minutes till close. Here now we are in the area where we can go up here, 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 so nothing interesting for me to trade. Market has its chance, price had its chance to go lower, didn't do it, so nothing interesting here. Yeah, this session is recorded. Indian markets, I have no clue to be honest. I can't answer this question. You have to figure out by yourself. Okay, one last question and then we close for today. Give me a good question. Come on. DAX. No, we are not looking at the DAX. DAX is a shadow of itself. It's so depending on US market. It's almost... I almost feel bad looking at the DAX. Why not consider the ODR 50 a valid setup in ES? Because it's just like you can see, like if we see a reaction there, you can enter. But like on how the market is looking right now, even if you enter here and you see a nice rejection, like technically you have to have your stop somewhere here, and then we are not having a real good risk reward ratio. So yeah, we have 45 minutes left, so I don't know. I mean, in general, when the market wants to go lower, he's not breaking this high anymore. He's not breaking this high anymore. So this is all collecting buy-side liquidity now. But no, I don't see it, sorry. Please explain the R concept for beginner. No, that would take too long. I mean, you can see it here also. That's not looking bearish right now. That's not bearish price action. Do you enter? Yeah, you can watch. I already explained this short. Like once the video is online on YouTube, you can watch it, and and it will be explained the short for the opening. Okay, one more question, guys. Did you use footprint on order flow? Nope. Well, I worked for SLPs. I worked for Citadel and Goldman, and I just know how we manipulated with our systems, how the order book is looking like and how level 2 data look like, even level 3 data. So there's nothing, and I'm sorry for everyone who ever used market profile but I can tell you in reality, this is also looking as the SLP wants it to look. So of course you can have good trades with it, but it's not real data. It's data you can't rely on because they are literally polished to look in the way we want them to look. It's a very good paycheck. Our concept, I use Goldman and I use Interactive Brokers. That's by 2 brokers. I don't read the tape. No. I'm following, tape reading is, I don't know, it's a modern, I do tape reading as Jesse Livermore did it. So that's literally what I mean, reading the price action. But tape reading, no. Footprint, no. Footprint also same as market profile. Yes. I only look at an algorithmic point of view. Yeah, fundamental the point is, we had this discussion on Discord. So how often have you seen intraday price action? I mean, fundamental for the long term, that's a different story for higher time frame. But for the intraday, it doesn't help you anything, because how many times we see data, macroeconomics data, considered to be good or bad, and the price action goes in the opposite direction. And then we see the news, because the market participants were already pricing it into price, and then it was just a bad number considered to be wrong, and then we go the other direction. So it's a big pile of bullshit. So fundamental, yes, for the long-term view, but on intraday, I can tell you, it's just happening on an algo basis. So the algo within milliseconds, when they get the data, is comparing all the forecasts from all analysts, what we have from Goldman, from ABN, and all of these banks. They give their forecast, what they think, what the value will be. And based on all this data, which is collected before the data come out, it's just the algo is just making his model based on this data, which he collects from all the analysts and all the banks and all the forecasts from the macroeconomic specialists. And based on that, he's just deciding, okay, whatever the data is comes out, I'm driving the market up and down. There is the market, the algo doesn't give a damn about how it's looking outside the algo world. So all the systems are not programmed to follow macroeconomic events. They are only to play the game and to play the other guys. That's what it's all about. Play, game the game and game your opponents. That's what it's all about. So all the algos are not programmed to follow any macroeconomic trend. They are just programmed to make latency on the exchange level, to make the SIP go crazy or not able to giving any NBBOs out. That's what these algos are doing. So, but on a level which is legal and correct and all compliant with the SEC most of the time. So it's just a very competitive market. No, everyone, banks, first of all, banks, not a lot of banks. JP and Goldman are liquidity provider, but most of the other banks are not liquidity providers. And everyone is running his own algo from these liquidity providers. They are like the fundamental, the core programming is for everyone the same. That's why DR works. But like in detail, what they are doing at certain levels, it's different because it's competitive. So Goldman wants to make more money than Virtue is doing, and Citadel wants to make more money than Goldman and Virtue together. So everybody's trying to get a competitive edge, which is mainly in this area with latency and with computing power and execution speed. So the core algo looking the same, but like there are some differences in the code and the programming language, environment, hardware, blah 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 blah. But in the core, they all look at the same. No cycles in my analysis. Can the algo skip misorders? No. If he wants to, that's how his price moving. I mean, just like literally to move the price down, people are thinking we need volume to move price into one direction. That's not right. We can move we like it's already happened. We can bring a share from $11 to 0.01 cent in less than 2 minutes with literally almost no volume. So all what we need is somebody willing to sell one share at one level. That's all we need. We don't need like big players to come in. It's very easy, and it's so fast you can't react. Like I can like an algo can show you 2,000 contracts at a level when you're looking at your market profile, and when you think now we're gonna hit it, and like you will be not able to execute against it because it will be deleted at like in the moment you're pressing your button, like the algo is already deleting the order, and you're literally buying into a void where no order is left anymore. It's just gone. And that's happening on a nanosecond level. I'm not talking milliseconds, I'm not talking seconds, we're talking about nanosecond level. So no way you have a chance against that. It depends on like I think like when the DR forms, it depends on what we are seeing. So when the DR is formed, like there's literally only two or three options. Either we go into a range, and range means at the end of the day, the algo doesn't find interesting levels to the downside or to the upside. So literally, that's happening before we have a big news day, where really like people are careful, especially the bigger investors, just not taking any position. Or we will have a strong trending day in one direction, and then it's quite obvious. Then, of course, the retracement back into the DR range is normally low and normally below the 50%, definitely. But if it's not that clear and the direction is not 100 clear, we will see higher retracements and sometimes even retrenchments back to the other ODR and IDR levels and then returning back. So, but that's literally all the scenarios what you have. Well, maybe one day. I'm still under NDAs, so I have to rephrase everything I'm saying here. I have to think about everything I'm saying here because of course I don't want to go into trouble for sharing something at the end of the day which doesn't help you. Because like even if I would explain you every detail of how an algorithm is working at certain levels, and like if I would explain you how to use the data or how to get the data earlier than everybody else, it will not help you because at the end of the day, all my knowledge I have about this area is just useless right now because I neither have the latency connection to the exchanges, I don't have the hardware, and I don't have the team to build these algos, even though I know how to do them. It's not helping me right now. I can't make money out of it. The only thing which I have is the knowledge and understanding at which levels something is happening and what levels the algo looks for. But me personally, even with knowing everything, I can't make more money than anybody else. Okay, maybe a little bit more, but like it's not helping me. I can't say, okay, now I'm using this and then now every one of my trades it's gonna be crazy good, you know? Okay, guys, that's it. I hope you had a good week, and I hope most of you took some profit out of the markets. I did definitely. I had a very great week, and I hope a lot of you had a great week too. And we're gonna see each other soon. I'm gonna try really. I want to have someone who really had problem this weeks with the price action, and I really want to have someone which I can talk to for 1 hour and analyzing the trades and talking with him. So if you're interested, drop me a message on Discord. I would be very happy, and I think everyone else would be also very happy because it would help a lot of people, I think. I mean, it's a different story when I'm explaining my view, but I think you will get another angle if I can talk with someone about the trades he's taking, and I can ask question and I can say, okay, why it makes sense, why it doesn't make sense. So if you're interested in that, drop me a DM and we will talk about this. Okay, good night, everyone. Discord, just check my YouTube. On every video, there is the Discord link below the video, so just click it and you have your invite. Love you all. Enjoy your weekend. Talk to you soon.